Bonjour à tous. Mon nom est Francine Picard-Moukasi. Je suis conseillère principale en politique chargée des partenariats à l'Institut international du développement durable. Et j'ai l'immense plaisir de vous accueillir au 5e dialogue virtuel des parlementaires et qui a pour thème aujourd'hui « Approche alternative aux garanties pour accroître l'accès des femmes au financement rural et agricole ». Je voudrais rappeler que cette série de dialogues est organisée par l'Organisation des Nations Unies pour l'alimentation et l'agriculture, FAO, l'Institut international du développement durable, IISD, et Oxfam, dans le cadre de leur soutien au réseau des parlementaires de la CEDEAO sur l'égalité en genre, les investissements en agriculture et la sécurité alimentaire. L'objectif de cette série de dialogues virtuels est de renforcer et de soutenir le rôle des parlementaires dans l'atténuation des impacts de la COVID-19. Et donc, nous avons commencé cette série depuis déjà l'année dernière. Il vise également, à travers ce dialogue, à ouvrir un espace de dialogue, d'enseignement, de partage et d'expérience et de réflexion.
Unfortunately, I cannot introduce the entire team. I'd also like to say that this dialogue were organized by a dynamic team, and I am happy to work with this team, especially Madam Takodai, Mata Osario, Paulo, Ilaria, Sylvia, Kunkutum, who have put in place this meeting. We will now start and give the floor to the facilitator. I want to recall why we're here today. If women had the same and equal access to guarantees, they would be able to perform better and increase production by 2.5 to 4%. The initial discrimination in terms of access is in terms of access to credit. They don't have guarantees, and women find it difficult to have access to funding, and this is inimical to the use of insurance and inputs and equipment. And financial institutions, we're lucky to have some financial institutions that are here to share their experience, and it is difficult because women do not have landed property, and it is difficult for them to have access to banking, and there's unequal access to land, and the rate of non-bankerization is lower for women than for men. And they cannot have access to loans. And despite the efforts deployed to have access and to be able to use quality financial services, these women are prejudiced. And therefore, there's also the issue of lack of access. And for rural women, they face with certain constraints. They don't have access to funding, even though they participate actively. And these contracts are not, these constraints are not only economic, social, legal, and cultural. With regards to financial offers, financial institutions are facing challenges to extend their services in the rural areas. We'd like to thank experts, parliamentarians, and rural women who would discuss on alternative access to guarantee to increase access of women to services. Now I will stop here and give the floor to Madam Day Beshika, who would moderate the dialogue, and I am very happy to see her with us today. Madam Daya Echika is the main technical specialist on gender and inclusion at the International Fund, and she was before country director of West African Central African Division, where she led the development of country strategies and supervised and coordinated programs of loans and grants of Benin, Liberia, and Sierra Leone. And we needed an expert like herself to facilitate this session. I now give the floor to Madam Daye Belchika.
Francine, thank you very much for this introduction. And again, apologies to everyone for this little technicalities. And that's what happened, you know, when we do webinars instead of being in person. So once again, my apologies. So welcome to this webinar on the alternative approaches to collateral to increase women's access to rural and agricultural finance. As mentioned by Francine, I am Ndaya Belchika, the lead technical specialist gender and social inclusion at IFAD, and I'm delighted, really, I'm very pleased to moderate today's event. So as mentioned by Francine, this is the 5th virtual dialogue of the Parliamentarian Actions, the Gender Equality and Resilient Food Systems in response to COVID-19 series. This dialogue is really timely as we are preparing the UN Food Systems Summit, public forum on gender, to ensure that gender considerations are not just an afterthought, but rather key consideration to be included in all the food system processes. So in this context, this webinar has 2 broad objectives. The first one is to provide a space for you parliamentarians, financial institutions, rural women, as well as other main stakeholders to discuss the importance of developing alternative approaches to increase women's access to finance through alternative collateral requirements. And the second objective is to increase women's financial inclusion in rural areas as a key factor to eradicate food insecurity, malnutrition, and rural poverty, as well as to improve the rural livelihood and the well-being of women and their households. Today, we have prominent speakers who will share with us their experiences, lessons learned, challenges, as well as opportunities toward inclusive policies and regulatory framework, as well as innovative programs and approaches to promote women's financial inclusion. So for this opening session, I am honored to introduce to you Mr. Abebe Eli Gabriel, Assistant Director General and Regional Representative for Africa at FAO, and His Excellency Sidi Mohamed Tunis, Honorable Speaker at the ECOWAS Parliament. With this, I would like to invite Mr. Abebe Eli Gabriel to start his presentation. Mr. Gabriel, the floor is yours.
Thank you, India and Francine. Honorable Sidi Mohamed Tunis, Speaker of the ECOWAS Parliament, honorable guests and panelists, ladies and gentlemen, greetings to all. It's a pleasure for me to make opening remarks at this very important dialogue on alternative approaches to collateral to increase women's access to rural and agricultural finance. As Francine and Diaga have already alluded to, this event is organized as part of the activities of the network of ECOWAS parliamentarians on gender investment in agriculture and food security, with the support of FAO, the International Institute for Sustainable Development, IISD, and Oxfam, in collaboration with Women in Law in Africa. I would like, therefore, to extend my appreciation to the organizations for co-organizing this event. Financial inclusion is a critical enabler for achieving the Sustainable Development Goals by 2030. In fact, it is identified as a target in 8 of the 17 goals, including SDG 1 on eradicating poverty, SDG 2 on ending hunger and achieving food security, SDG 5 on achieving gender equality, and SDG 8 on promoting economic growth and decent work. In FAO, we believe that increasing finance and investment in rural areas is vital to achieve food security for all people and eradication of rural poverty. FAO also recognizes that improving rural women's access to financial services is a proven strategy for contributing to their social and economic empowerment, for improving the livelihoods of rural households and communities, and build sustainable food systems. Having adequate access to financial services allows rural women to fully participate in the economy, procure the inputs, labor, and equipment they need for their agricultural or rural off-farm activities, better manage risks, and take good care of their children's education, nutrition, and health. Women are responsible for half of the world's food production, and in developing countries, they produce between 60 and 80% of food and are responsible for. However, compared to their male counterparts, female smallholder farmers find it more difficult to access land, training, market information, inputs, as well as rural and agricultural finance. The barriers faced by rural women to accessing financial services include socio-cultural norms and perceptions, discriminatory regulatory frameworks, time constraints, poor access to productive assets or property to be used as collateral, and high illiteracy, including financial illiteracy and limited information on financial products and services. Rural women in many developing countries often do not inherit and own assets or properties that can be accepted by formal financial institutions as conventional forms of collateral. The lack of access and ownership of recognized collateral makes it difficult for women to obtain loans or access other financial services and build up a credit history. And it is frequently reported as one of the main obstacles encountered by women-owned small and medium enterprises and by many smallholders. Today's virtual dialogue of the Parliamentarians Actions for Gender Equality and Resilient Food Systems in response to COVID-19 series brings together parliamentarians, financial institutions, and other main stakeholders to share existing public policies and strategies in the African region to develop alternative collateral approaches for risk sharing and management that can increase rural women's access to finance through alternative collateral requirement. Today's dialogue aims to enhance the capacity of parliamentarians to engage with financial institutions and other stakeholders to strengthen national financial markets through the promotion and adoption of regulatory and legislative frameworks. FAO is strongly committed to support initiatives that create an inclusive financial space for women. In doing so, the organization recognizes the importance of formulating policies, regulatory and legislative frameworks for establishing an enabling environment towards women's equal financial inclusion. To overcome women's barriers and support gender-sensitive financial inclusion, FAO assists governments and other national stakeholders to design and implement tailored interventions, including innovative instruments and approaches within financial sectors to reach poor rural women, the adoption of alternative collateral and group-based approaches, and new ways of increasing women's access to ITCs and financial literacy training, and the provision of advisory and business development support. In addition to the direct support through in-country work, knowledge generation and dissemination, and capacity strengthening to support women's financial inclusions are key areas of FAO's work. This work is even more critical today in the context of the COVID-19 pandemic. Worldwide, smallholder farmers are experiencing even more difficulties to access liquidity, and urgent actions are required by the financial sector to provide innovative services for rural people to ensure their next harvest and planting seasons, as well as food security and nutrition for everyone. The economic impacts of COVID-19 have disproportionately affected women, who generally earn less, save less, hold more insecure jobs, and live close to poverty. The overall lessons learned from the COVID-19 crisis point us to the need of closing the gender gap in financial inclusion in some key aspects, which include collecting data on women's access and use of financial services, including credit, saving, and insurance. Sex disaggregated data will produce the evidence to support the design and implementation of policies and investments targeting women's financial inclusion. Investing further in digital and financial literacy programs that take into consideration gender differences and focus on behavioral changes. Developing financial services and products that take into account the specific needs and priorities of men and women. Supporting the development of an enabling environment with adequate policies, legislative and regulatory frameworks, And finally, investing in women's leadership and negotiation skills to increase their capacities and participation in planning and decision-making. FAO will continue to strive in this direction. And I thank you very much for your kind attention, and I wish you a fruitful discussion. Thank you. Over to you.
Thank you so much, Mr. Gabriel, for first, shedding some light or painting the scene of the current situation of women compared to their counterpart men when it relates to the financial inclusion, and also to restate the importance of financial inclusion in attaining the SDGs that not only are cutting across, but are also specifically mentioned in 8 of the indicators. Thank you also for mentioning how important it is to close the gender gap in financial inclusion, and also highlighting the contribution of financial inclusion to women's social economic empowerment, the improvement of livelihood in rural communities, as well as the resilience and sustainability of food systems. I am told that His Excellency Honorable Sidi Mohamed Tunis, as Speaker of the ECOWAS Parliament, is running late. So then, without further ado, what I would propose that we do is to transition to the first session of this dialogue. And for this, I'm very pleased to open the discussion that will focus on the state of women's financial inclusion and the challenge of collateral. Our keynote speaker for this session is Mr. John Amimo from Africa, the African Rural and Agricultural Credit Association. And Mr. Amimo will provide an overview of various alternatives to collateral, with some example on how these can increase women's access to finance. John, I invite you to proceed with your presentation.
Thank you, Ndaya. Thank you for those kind remarks. Good morning, afternoon to everyone. My name is John Amimo. I'm joining from Nairobi. I'm the head of programs here at AFRACA. I think you've heard the acronym. It's a very long acronym. It stands for African Rural and Agricultural Credit Association. So our business is credit. And I'm here representing, I can say, over 150 financial institutions spread across Africa. So thank you so much, the organizers, for giving me this opportunity. What I'm going to speak about really is a reflection, and some of them are even implementing some of the recommendations that I'll be sharing through the presentation. So that's the title of my presentation, The Challenge of Collateral for Women's Financial Inclusion and the Importance of Alternatives in Rural and Agricultural Finance. We can go to the first slide, Francine. The first slide, please. Yes, thank you. So I'll start basically by trying to answer the question, why collateral? I have a diagram there. Sorry, it's not very clear. But generally, the diagram outlines some of the key challenges facing rural and agricultural finance in Africa. This is not gender-based, this is general. And these are the challenges that financial institutions actually perceive. You will see that the first box, which is outlined, farm level, has the most bullets. And I think this is where the challenge comes from. The way financial institutions perceive agriculture, they perceive it as risky. The bullets outlined there basically depicts the level of risk that financial institutions perceive. And there are quite a number of them. I don't want to go through all of them, but quite a number of, I'm sure you're familiar with most of these risks: lack of affordable inputs, low prices, low penetration of machinery. There's one bullet there which we'll talk about in my presentation, and that is the lack of collateral, land title and capital, lack of financial documentation and record keeping, quite numerous. In fact, I think ever since we identified these risks, what we've been trying to do is just trying to delete some of these bullets as we go along. So, and I think that is what we are trying to learn through this session today. Over to the next slide, Francine. So basically, the last slide just tells you the magnitude of challenges in the rural and agricultural. The issue of gender or women, it even makes it more complex. And I think that's what underlines the fact that you don't see a lot of financial packages targeting women. Over to the next slide. So I think there's probably another slide we may have forgotten, but I'll continue with this one, alternative approaches to collateral. But first, I think the slide before that was talking about the collateral that is currently synonymous with financial institutions. I think most of you are familiar with collateral. I'm sure all of you have borrowed some money from your bank. And the collateral that is always required by your financial service provider, I can categorize them into two. There's the tangible assets. Your financial service provider will always ask you for some kind of collateral to guarantee your loan or credit. And the tangible assets are normally in the form of land, motor vehicles. In agriculture, sometimes it's farm machinery, such as tractors, processing equipment. All these form part of the tangible collateral that normally financial institutions would request for. And then you also have intangible assets. But they're commonly used in lending. A lot of institutions, if you're familiar with the structure of most financial institutions, they always have a department called trade finance. Now, trade finance is always a department that they look at the trade arrangements between actors. And a lot of the trade arrangements are usually formalized. Formalized where there's always something, there's always a forward contract, there's always a local purchase order. And this is also something that financial institutions like, using in their lending. So it's a very common instrument and always hidden under the Department of Trade Finance. When you talk to most banks, they'll tell you, we do lend more to agriculture. It's just that we don't lend so much, in the primary production segment, but they do a lot of trade finance. Now, most of these are usually the commercial banks who normally prefer this kind of lending. So given the collaterals that I've mentioned, it's obvious to see that women, especially the African woman, owns fewer assets that are formalized, and I'm talking about title deeds, other collateral like machinery. Women really affects their chances of accessing financial services. So I'll go to the slide that is on the screen now, and that is the alternative. Just go back, Francine, to the previous slide. Yes, that one. So the alternative approaches to collateral, that's basically the basis of my presentation today. So collateral has been very traditional, very conventional over the years. What alternative approaches can be adopted by financial institutions? And I must say there are quite a number of evidence that we have seen over the years, particularly from Africa. But I'm sure most of you have seen, or rather gone, have even worked in interventions that have tailored financial packages for women. But generally, I must say that from my own assessment, where I sit at Africa, there's really very limited, tailored financial packages that target women. I think, over the, currently you've been seeing a lot of, institutions offering financial packages targeting, I call them women-led SMEs. Financial institutions are always very careful. They tell you, I don't want to to be very gender biased. When I'm giving a loan or a credit line, my target is to target everyone. So there's this, there's this growing, package which has been emerging over, the recent years, women-led SMEs. Personally, I don't like the word SMEs, especially within the context of rural and agricultural finance. Uh, it's one of those terms which I love and hate at the same measure, but maybe because it's a relative term and can be interpreted, differently by anyone depending on where they operate from. When I talk about SMEs, or when someone talks to me about women SMEs within the agricultural context, I always have this perception of a modern, working woman, who is trying to do agribusiness. So in my perception, I always find it, a little bit exclusive and does not include the typical rural woman who we are trying to talk about today. But that is just my opinion. I don't want to open a can of worms, but that's my perception. But yes, banks have started delivering or offering those kind of financial packages. And I'm always critical about those packages, because when you go deep and look at the requirements of those packages, you'll always find that they're not very far in terms of, interest rate and things like that from the traditional credit lines that are being offered by financial institutions. So yes, I'm always very critical about them, but nevertheless, I think it's a start, and I think it's a good start. But we need to take financial institutions to the next level where they can offer tailored financial, solutions for women.
John, if I may, I just want to bring it to your attention that you have another 3 minutes. Over to you.
Wow. All right. Great. So, right, I'll go quickly to some of the alternative options, and one listed there is the pay-as-you-go. I think this is a very common financial model used in the solar sector. A lot of the solar companies have incorporated this pay-as-you-go model, which I feel can be extended to, the agricultural sector, and women can be enabled to use pay-as-you-go to acquire some assets that can make their production a little bit efficient. Another alternative approach I'm quite excited about is the role of women in agricultural trade. And I'm excited about this because of the African Free Continental Trade Agreement. For me, I think this is really a good development. And I wish we can take advantage of this. I say that because a lot of our trade is really informal. There's a lot of cross-border trade happening, and which is highly informal. I think there's a need to bring that type of trade into a much more structured model. And if women can participate more, in trade, I think that can help alleviate some of the, collateral constraints. Like I said earlier before, financial institutions like trade finance. So if trade is structured, this provides a much more attractive, I can say, element to financial institutions. So I think the challenge here is for parliamentarians and other stakeholders to think about how, we can take advantage of the Africa Free Continental Trade Agreement, how we can increase cross-border trade with women, taking a pivotal role in this. Next slide, please. Next slide, please. Yes, so those two options that I mentioned, I think those are options which don't really require a lot of policy, re-engineering. I think those are obvious. Those are options that are there currently being used in the market. They just need to be scaled up a little bit. But definitely there are policy considerations. The first one I'll talk about is promoting character-based lending. That is something that is not very common, but highly, highly dependent on the credit. Countries that have a good credit reporting infrastructure, I think we have started seeing some kind of development in this. I think like where I am in Kenya, I'm able to borrow a few shillings because of my good character, in lending. And I think if this is to be extended to agricultural borrowers, it can help eliminate, the collateral constraints. Existing institutions. This again is really critical. Sometimes, when there's an agenda that is being drummed by everyone, the need is always to create new institutions, but it's fortunate that most African countries always have a certain institution that tries to endear to the rural and agricultural sector. Most of them are called DFIs. These are special purpose institutions, and I think DFIs, we are doing quite a lot of work with DFIs in Africa, and I think there's need to transform them so that they can start embracing gender-based lending. There's quite a lot of financial instruments out there that can be used. The private sector is quite reluctant to use them, but I think our DFIs, most of them who are there, can be enabled, to incorporate these instruments and try to stimulate the sector. So repurposing public resources through existing institutions, for me, I think is a key policy recommendation. Over to the next slide. I'm almost about to finish, Ndaya.
Thank you, because I was about to come to you and say that, at the same time, what you present is extremely interesting. So please, if you could wrap up, that would be super. Thank you so much. Over to you.
Great. So this is my last slide. I'll go quickly through this. And the other one is providing incentives to financial service providers. So those financial service providers who are trying something, to do something for women, I think they should be given some kind of incentive. It could be in form of tax rebates, but again, the list is endless, and it's up to countries to, innovate, to see what kind of incentives they can provide financial institutions. Another one is issues related to land reforms. I mean, this is something which we cannot avoid. Women need to be empowered to acquire assets. I know a lot of countries are trying to do this, through other agencies, but there's still a long way to, to see how we can reform our land, legislation to accommodate women. I've given an example of land banking in Tanzania, in South Africa. There's a bank in South Africa called Land Bank. A land bank is a practice of, it's a practice of aggregating parcels of land for future sale or development. I don't want to go into details about this, but there's a land bank in South Africa, which was formed, to address, the historical injustices and things like that. And it has worked really well. I wish you can find time and go to their website and just see some of their success stories on what land banking has been able to achieve. The last one I'd like to talk about is generating gender-based data to develop appropriate policies. I'm very scientific in my approach. I always advocate for scientific approaches when it comes to formulating policy. So because we understand every country is unique, and Africa is unique in every village, so if you want to support women, really you need to understand the unique characteristics of every woman in a particular village, in a particular region. So that's what I'm saying. I always advocate for scientific approach. Let's get into the habit of conducting baseline studies, scoping studies. I know these are things which are always, supported by agencies like FAO, IFAD, but I think government needs to start getting to the habit of doing this kind of things, so that you get a better understanding of the profile of the women that you're trying to support. So thank you so much for listening.
Thank you so much, John. This was extremely, extremely interesting, particularly some of the alternative ways to mitigate the challenges related to collateral. So I guess that's why, even as I was looking at some of the chat, people are interested in some of the suggestions, particularly linked to some of the policy considerations that you mentioned, as well as the opportunity to actually take advantage of the African Free Continental Trade Agreement, which I think is a key element. And then the way you ended also is very, at least, it speaks to me particularly, the importance to actually know who we are targeting by doing some assessment, baseline scoping studies, but then to do this really to go into communities that we intend to serve, because unless we know, we won't be able to actually understand what is it that we have to provide. And then we won't be able to see what difference we make, right? So, you know, well presented and well addressed. And I'm sure we'll have more questions linked to that going forward. It is now my pleasure to give the floor to the next two panelists of this session. The first one is Tenem Fatima Diko from the World Bank, who will share examples from Burkina Faso and Ethiopia. She will be followed by Joseph Sang Jula Lutwama, and I hope I'm pronouncing your name correctly, Director of Programs from the Financial Sector Deepening Uganda. So I will invite each of you in turn to share one or two examples of alternative approaches to collateral adopted by your organizations. And I will start with you, Fatima, the floor is yours.
Merci Daya. Bonjour tout le monde. Je suis
Tenem Fatima Diko. I work in Washington. I work in the department that is responsible for private sector. And I have the pleasure to talk about our projects and in Burkina Faso. Could we still have the PowerPoint? These two projects, they're within the framework of our interventions. We have noted that access for women, her line is breaking. No, the sound quality is not good, Fatima. We are not hearing you very well. Do you have a headset? It will be easier. It's difficult to understand what you're saying. Yeah, but you need to speak. So increase the volume. Let's try again and see. As I said earlier, during our interventions, we noted, next slide, we noted that access for women to financing we find many women in credit groups. They have a collective support, groups of 3 to 5 women. These groups help women to have access to credit, but the amounts that they have access to as individually are limited to support them, especially those who are in income generating activities or those they need more and more money to be able to operate properly, and they don't have access to huge amounts of money. If they want to have a personal credit for their companies, the requirements for guarantees are very stringent. So many women are faced with problems. And within the framework of our interventions in Ethiopia, especially, we have introduced within the framework of the female entrepreneurship program, we have an innovation in the area of financial technology, and that is what we call psychometric tests. These psychometric tests, and within this project in Ethiopia, we have introduced in partnership with EFM psychometric tests, where women are invited to sit for a test, so we know their level of literacy, and we use pictures. There are no wrong answers, but this test is assessed based on their possibility and potential to reimburse the loans. And they have questions on their understanding of activities and so on. And these texts last for 20, 30 minutes. It can be done in an institution on a laptop where the woman is. And once the woman has gone through this test, a financial institution synchronizes with the database, the relevant database, which has data on over 250 individuals. And there's an algorithm that does the scoring on the basis of on the basis of this scoring. That's people pass the test. What we noted is that on the higher the scoring, and the less they will default. So this is a reliable database that is used to score in Ethiopia, and on this basis, and this system evolves progressively. The more tests we have, the more rich our databases. And on this basis, we have over 8,500 assistance that we have, loans that have been given, with about $9,000, and most of the more and more people are having access to the loans. And we noted that the bank, together with the Ethiopian government, has provided a credit line, but financial institutions have disbursed over 30% of the amount that is loaned to these people, and the rest is coming from their own funds. And the default rate is lower, it's less than 3%. This experience is very interesting, and it is on this basis that we provide loans. It is an innovative experience, it is an innovation, and the technological solutions that are improving access to loans. The other model that we tried, which is happening in Burkina Faso in terms of financial inclusion, is the establishment of partial guarantee, portfolio guarantee scheme. It is at the level of credit for personal loans, and the criteria established ahead of time, and we check what types of credit the people are eligible to. There are eligibility criteria that are pre-established, and they are attuned to the sector. And any application for credit is based on these criteria. As I said, the advantage is that these guarantees are managed by those who manage the guarantee funding system, and the final loan person who takes the loan is it's not actually the one who's taking the credit, but it is based on a financial institution. And in case of Burkina, for women entrepreneurs, the risk sharing is 65% for women. And the financial institution, knowing that there's a guarantee, the requirements are less stringent. And this is a system that was established in Burkina, and the project has been happening since 2019. And we noted that every 3 months, about 350 loans are given, and most of them are new loans, and 3/4 quarters are new borrowers. So even if the final beneficiary is a woman who does not have a guarantee, because but then this helps minimize the so that women know that they have to repay these loans, but they benefit from the guarantees from the financial institution. This model is ongoing, and we'll try to draw some lessons from how it unfolds in terms of elements, be it psychometric tests or other schemes that are in place. There's something important, and we need to think about financial education and protection of consumers of financial services. Consumers need to know what is being done, what are the pros and the cons, and what are the conditions that underpin this, and then progressively we've seen in West Africa, especially in the Eurozone, the establishment of what we call the Observatory of the Quality of Financial Services, which checks how financial institutions are behaving and also makes it possible for consumers of financial services can give feedback, they can lodge complaints, and it is important when we talk about access to credit and also to ensure, especially for women who are barely educated, for them to know what, where they can find remedies if they have problems, where the problems can be solved. It's an important role for parliamentarians to know what constitutes protection of consumers of financial services. The other element is with regards to several, my previous speakers talk about this, the pollutions, fintech, or any other type of alternative for guarantees that we use. It is important to have data, and more we are seeing the establishment of credit agencies. These credit agencies are open for those who have already registered in the financial system. They took the information from that, from banks and financial institutions, but those who are outside the financial system and we want to include them, the credit bureau does not have information on them. So the financial asymmetry is an important challenge if you want to assess the information for the person who's not on the system. So progressively, institutions in countries have asked that credit bureaus take into account transactions that are done with countries like Togo and Niger have passed laws so that those who invoice people the most, like electricity companies, provide information on settlement of bills to see whether they have delays in payment for electricity bills. These are indicators to know to what extent a person can pay for the loans that they have taken. And then the more data the credit bureau has, the better the system you have. You can have psychometric tests to fine-tune this access to credit. In Togo, Niger, they've used like electricity bills, but it can be expanded to ensure that use of credit, and you can use, as I said, electricity companies, IT companies, so that you can have alternative data to be able to score and do credit rating. Something important that we need to look at is the security register, collateral registers, to how to modernize these electronic registries, and also simplification of registration and broadening scope of assets. I think that when the previous speakers said that the collateral is maybe land, but there are other assets can be used as collateral. Finally, one of the elements is to encourage innovation in the financial sector, be it fintech or insurtech, but we need to promote innovation, bearing in mind that we need to regulate the financial sector because they are assets, but it's people's money. But we need to find a way of striking a balance between innovation and regulation. Is a difficult equilibrium to strike, but then again, we need to have a new way of dealing with personal data and to protect personal data, privacy, and to promote innovation. And in the Eurozone, for example, we're doing this work. How do we regulate whilst promoting innovation in the sector? And I think that for the parliamentarians, this is important. These are areas and which are of interest to us, and we need to challenge countries on the strategies that they adopt to promote financial inclusion, and to know where we are and what is the impact of this widening this financial inclusion, what are the results, and also to invest in improving the quality of data that we have. I wanted to share these ideas with you, and to show you what we have done to promote consumers for financial education, access to data, and also the collateral registers. And it was a pleasure. It is a process, an apprenticeship for us, and we're working in several countries, and it's a pleasure for us to share our experience with you and to share it with all these institutions. Thank you very much, Fatimata. It was very interesting.
Thank you very much for this, because what you presented actually complemented extremely well the presentation from the other panelists. You know, what was very important is that in the example that you showed, one was to actually address some of the risks that we see in agriculture, to trying to share that risk by providing some guarantees to the portfolio from the financial institutions. And I think that's extremely useful. And the other one was some innovation in Ethiopia, looking at some innovating tests during psychometric tests. And then what was also very interesting was some of the suggestions that you are providing for the parliamentarians. And that's very well elaborated. I'm sure that we'll be discussing them a little bit more during the Q&A session. And with this, I would like now to turn to you, Joseph, so we can hear about your views on the parliamentarians' role in facilitating women's access to rural and agricultural finance. Over to you, Joseph.
It's a pleasure to be speaking to all of you, all protocols up. I'll take a few minutes to talk about what we've been able to do to try and be able to increase women access, especially the women in rural areas who do not have collateral. You can move to the next slide. Yeah, a little bit about ourselves. We are based in Uganda. We're leading think and do tank on financial inclusion and inclusive financial market development. So we do quite a lot of work working with women, youth, MSMEs, forcibly displaced persons, that's refugees and the disabled. Next slide. I will start by just giving us a snapshot of the state of financial inclusion for women in Uganda. Now, you'll notice that a majority of adults in Uganda actually live in rural areas, and you also notice that a majority of the 40% of the poorest actually also live in rural areas. You also notice that the most widely used form of financial service is savings groups, or what some people usually refer to as VSLAs, or Village Savings and Loan Associations. The other interesting thing you can actually see, especially in the interest of our discussion today, is that you'll find that there are more men who own property than women. You can actually see from the statistic there that 68% of the 68% of the poorest men own a house compared to only 41% of the poorest women. And most of these, like we saw earlier, are in the rural areas. The other interesting thing also, in the interest of our discussion today, is, again, you'll find that there are more poor men who own land than there are women, poor women who own land. The other interesting thing, actually, you'll see from that statistics, even among the richest, you'll find that less women do actually own land. You can actually see from the statistics that almost one out of every two the richest men own land, compared to just under 1 out of every 3 women, richest women who own land. We can move to the next slide. So what have we done? What are some of the approaches that we have deployed to see how we can be able to address and navigate around the issue of collateral? And one of the examples is a group lending model. This is very common among microfinance institutions, but it's one of the most widely implemented and also one of the most effective approaches to reaching out to women. Like you saw in the statistics, a majority of women, especially in rural areas, they actually rely on savings groups to be able to access financial services, whether it is savings or whether it is loans. So instead of trying to get these women to get to formal financial institutions, we thought that it's important for us actually to get where they are. And the group model has a very interesting implications for women. You realize that most women are usually home caregivers and they spend most of their time at home. They do most of the farming, they do most of the chores at work at home. That means that they really never have time to actually go to the nearest bank. Usually, they are working at home, taking care of their children from morning almost to afternoon. And by the time they will probably have had an opportunity to go to the banks are probably closed. So you find that most of them, even when they wanted to access these formal financial institutions, they're not able to because of the nature of their work and the nature of their responsibilities in communities. That's why they find village savings groups more convenient, because village savings groups are not limited by time like formal financial institutions. They are flexible, they can meet anywhere. So it's a very convenient, accessible form of financial services. We can go to the next slide. Can go to the next slide. So those are some of the advantages of the group lending model. I won't list all of them, but I'll pick out one which is the most outstanding. Is in a group lending model, the financial institution is a partner to the savings group. And the savings group literally does most and the bulk of the work that a typical loan officer or whatever would have done. So all the formal financial institution has to do is to find the most efficient and effective way of linking their formal financial service to this group. Otherwise, the group does all the due diligence on their members. And since they have this social cohesion within the community, most of the group members know themselves, and they're able to guarantee the loans of their members. So they're able to take out the loan as a group, and then they're able to guarantee responsibility of most of the risk and the risk process, which most banks shy away from. So you find that in the group lending model, the group actually becomes a very reliable and efficient and effective partner to the formal financial institution. Go to the next slide. So we've tried this.
Joseph, if I may, you have about 3 minutes. Okay, or maybe fine, two, actually, fine. 2 minutes, if you can be concise. Thank you.
No, that's fine. We've tried this with a number of partners, and one of them is the Vision Fund. Probably most of us know Vision Fund International, but this is their branch in Uganda. You can move to the next slide. So what Vision Fund was able to do was advance credit. They actually did an analysis and evaluation of various savings groups, and they focused on those groups that have been able to share out their income for at least 2 years. And they also looked at groups that were able to have sizable savings, and therefore they're able to advance loans that were 50% of the share out size of the groups. That reduced the risk of the bank and of the credit, because then most of these groups were mature, they had stable members, they had committed members, and that increased the probability of them paying back the loan. Go to the next slide. And as they move to the next slide, I also want to reiterate that Vision Fund also was able to leverage technology to be able to access and be able to onboard these groups remotely. They were able to use mobile phone enabled gadgets that were able to capture the information about these savings groups. These savings groups were able to use mobile phones to access their accounts with Vision Fund, to access their credit and to pay back their credit. What this was able to do is women were no longer burdened to actually having to go to the bank. They were able to access their bank accounts from the comfort of their farms, from the comfort of their communities, and they were able to monitor their accounts from the comfort of their communities. That removed away the stigma of having to go to the bank and all the challenges that women have by going to some of these bank branches. As a result, over a period of 12 months, thereabout, 12,000 group members have been able to access credit, and 75% of those are actually women. Over 600 groups have been able to receive loans, over and above the 350 groups target that we had. And as a result of this credit, this increased the pool of funding that these groups had. And as a result, they were able to increase their returns as a group. And at the end of the year, they were able to increase their share out by 60. So village groups can leverage the financial mass of our formal financial institutions to actually not only increase their ability to lend out to their members, but also their ability to generate income from the group, and ultimately their ability to increase their levels of income, not only as a group, but also the members themselves. In terms of some of the policy considerations.
Joseph, can I ask you, Joseph?
Yes, I've actually come to the end. I was just wrapping up with some of suggestions and some of the policy considerations that the parliamentarians can be able to consider.
Excellent.
To see how they can be able to support these groups. One of the things that we have done in Uganda is to be able to create a legal and regulatory framework for microfinance institutions and community-based financial institutions. So we currently have a regulator, which is the Uganda Microfinance Regulatory Authority, that provides oversight not only to traditional microfinance institutions, but also to community-based savings groups. The value in that is that it provides focus and interest in that form of financial services. It seems to be an informal financial service. It's able to receive the attention of the policymakers. The other thing that we are trying to do in Uganda is to go beyond saving for personal needs and personal consumptions, because most of these savings groups, they save and borrow for personal needs. But to be able to move to the next level and commercialize these groups, transform them into production units by linking them to a cooperative, a marketing cooperative, and a financial cooperative. What that does is that it transforms the mindset, the approach of this group, and the scale of this group to look beyond just meeting their household needs, but to begin to produce commercially. That then transforms them in actual productive units of the economy, and then it literally also transforms the livelihoods, not only of the women, but also the communities and the families they live. Because you've linked this savings group to a cooperative, they're then able to focus on a particular product, whether it is maize, whether it is bananas, or grain, or whatever it is. And then with that sort of structure, they're then able to produce on scale and increase their levels of income far beyond their subsistence needs. So I want to submit and probably welcome any questions as they may arise from the presentation.
Thank you so much, Joseph. Thank you very much for nicely complementing the previous presentation, in particular with this powerful example of group lending. And I think what you did, you actually brought this a step higher by not only mentioning the impact that was able to be measured, because we talked about measurement in previously, but also to show how through the group lending, it actually had a transformative impact, right? I mean, to move from small scale production to actually large scale, and then to move from subsistence to commercial production. And I think that's a powerful example. Thank you very much for that. With this, I would like to invite the floor, actually. We have a few questions for our various panelists. What I would propose is that we do about 3 minutes each. And I would like to start with you, Fatima. On the last slide, you did talk about, you provided some areas of consideration for enabling the environment. And then at the bottom, you were talking about the possibility of increasing or creating an environment that promotes innovation. So could you discuss a little bit more about InsurTech, talk a little bit about it? Do you have any information about that you would be willing to share with the broader group? And, in addition to InsurTech, the other innovations that you mentioned. And then also, you did talk about the importance to protect data, particularly when we go into innovations. So how should that be done specifically? Over to you, Fatima.
Merci.
Two questions for you.
Merci, Daya. La première
Thank you. The first question is on fintech. With regards to the project, line is unstable. It's difficult to hear what she's saying. No, let her speak closer to her mic. I was saying in the project that I propose is EFL, we work with them, and it is a solution for credit scoring. And this, we can share project documentation. It is a project with the Ethiopian government, and the documents are available. IFL is involved in all these interventions everywhere. And there are technologies in terms of insurance. They use data, access to the data, security solutions, and distribution through mobile money. At level of the bank, we work and try to organize innovation challenges. And these are competitions that we organized. We've done that Asia in 2019, where we had 3 categories of innovations. We selected solutions that are developed to make insurance more inclusive technology and solutions. And these innovations were used as pilot projects in Asia and in Sri Lanka. And we plan to do the same thing in Africa to 2020. And then COVID reared its ugly head. So now we're reviewing the situation, and we do hope that we can organize this quickly. It's an area that is new for the bank, InsurTech, and we are looking at it closely, and we try to have this innovation phase to know what works and what does not work, and then to use those who win the competition as pilots. With regards to documentation, we're able to find on most of our sites the documentation. We have information policy, and when countries agree, we share information on their projects. Now, with regards to regulation, InsurTech, and all these techs, it is important to look at the framework in place in countries on data protection. And I do believe that progressively states are reviewing these laws. These innovations are happening, These are sound innovations. They are at the intersection of several sectors, the financial sector, because they deal with loans and insurance, and we have technologies that the support device use is mobiles, and then we have telecommunication regulations, regulatory bodies that come into play, and then the issues of personal data protection, and what type of data do we take from the population, what do we use that data for? It is a bit delicate to regulate this, but most of the time we know that's important to put in place committees at national level that brings together all the actors. It is at the intersection of different areas, and we also need consumers of financial services. Apart from these regulators, we need the ordinary lay person, the person in the street, for them to have representation. And at the national level, countries have reviewed their laws in order to include aspects dealing to data protection vis-a-vis this new technology. But then again, they need to do some work to review our codes and our laws that deal with data protection and the use of data, to update them if necessary, and to ensure that all actors are involved. I don't want to interrupt. Is there a good example that you could recommend that could serve as a model board from which we can draw inspiration? Briefly, because after that, I need to go to the next speaker. The models that we can look at could be in west of Africa, Senegal. Women are doing a lot of work in that area. They're coming together and to mobilize actors around the same table to discuss these matters and to see how to better protect consumers. Cote d'Ivoire too, in the establishment of its observatory on the quality of financial services. These are countries that merit, that deserve to be looked at. Before Cote d'Ivoire, which country would you refer to? Senegal. Senegal. Senegal has its observatory that is operational. Thank you. That was very rich. Now I to give the floor to John. John.
To see if there are any successful model that Africa could share on tailor-made financial support for women, which address their need and priorities, particularly when we look at SMEs that are led by women. So again, any tailor-made financial support provided to women, successful examples. And then the second question, so I'm just asking you two questions as well. The second one would be, in terms of incentives, what has been working? And then do you have any models, any specific example of incentives that you know that have been working? Over to you, John. You have about 3 minutes to respond to questions.
All right, thank you. Thank you so much, Ndaya. Yes, those are welcome questions. Let me start by the successful model. I think maybe the model I would like to highlight is from an institution here in Kenya, which is a bank called the Kenya Women Microfinance Trust Bank. This bank started as a project, but later it evolved into a fully fledged bank now, which is deposit taking. I can spend a whole day talking about Kenya Women, but I think they, being a bank focused on women, I think it has proven that, it's one of the few examples, that is there. And I know a lot of the institutions, even financial institutions, when they want to do something in women, they always work in close collaboration with them. I remember the other day I was talking to the CEO of the bank, and it was mainly around policy. And he was telling me, John, over the years, our experience in lending to women is, there's always this general perception, especially from policymakers, that women require low cost credit. But I think from their experience, they're saying actually that's not the case. I think women generally are good borrowers, and they would borrow at market rate and repay without any problem. So I think that perception, given the experience from the bank, should actually, send a message to the policymakers, that this is actually the case. The other day, I think the bank opened up to male borrowers, and he was a little bit, he told me he was a little bit reluctant to do that, because, maybe, he felt men generally may not be as good as women. So it's interesting. I'm yet to follow up with him to know how his portfolio is performing, especially in agriculture. So that is just one example. I think the other example, which also relates to my parting shot, really, to the parliamentarians here, is I think it's about time we start institutionalizing some of these interventions that have been mentioned, especially in this discussion. There are quite a number of them. What do I mean by institutionalizing? I want to give an example of Ghana and Nigeria. The reason why I find those are interesting examples, the challenge we've had, Ndaya, over several years, or rather years, is rural and agricultural finance. Where is it domiciled? It's still, something is still an area which, is neither in agriculture, neither in finance. Most of the time, these ministries always come up with interventions that, are almost, similar, and end up conflicting at some point. What I've realized is interventions that have been started by the finance ministry, especially through the central banks, have always succeeded better. I think mainly because the central banks are the bank's regulators, and there's always that trust element. So central bank interventions, I think, have always performed better in my general assessment. And that's why I wanted to mention the case of Ghana, where the central bank established a guarantee scheme called GARSAL, which is Ghana incentive-based, incentive risk-sharing lending scheme, GARSAL. Nigeria started it. They have one called NARSAL. Now, these support, institutions started from the central bank, and they have been well adopted by financial institutions. They're still, I can say they're still developing, because the model of working is trying to bring in as many financial institutions into that guarantee scheme. And within the scheme, there are quite a number of incentives. There are, tax incentives, there are, commissions, discounts in the commissions when, people are paying their loans. Those kind of, incentives. They're very, I can say they're very different, within, between the two schemes, Ghana and Nigeria. I think those two cases, are very good cases. I know FAO has done some work around that. But that's what I'm trying to say, that a lot of these interventions now need to be institutionalized, so that they can, they can continue, as they continue evolving, they can start incorporating other, I can say, other credit lines or innovative products within those guarantee scheme, like lending to women. So if a financial institution starts developing solutions to women, then, that scheme can support, that financial institution in various ways. So I find that, for me, I think it's a model that works very well. I know African Development Bank has been pushing for, risk sharing schemes across Africa. But I think, yeah, this is a good start.
Thank you. Thank you
yes.
so much, Joseph. Thank you. Thank you very much for these two examples, and then for actually providing some detailed information that can be used as reference by today's participants. So thank you very much for that. Now, I know that we are getting pressed for time, but I also have two questions for you, Joseph. And if you could please, indulge me and respond to those questions in 3 minutes, would be very much appreciated. So the first one, Joseph, is that you did mention the use of telephone in your first slide, showing some gaps between male and women, poor or rich, it doesn't matter. What can be done, or what did you do to actually overcome that gap? So the gap between women and men, as it mentioned on your slide number 1. And then the second question you did also is also related to mobile phone. So what type of information is being used to actually support these saving groups when you talk about the use of mobile phones? So again, what type of data is being shared or exchanged within those groups when we talk about the use of mobile phone? Over to you, Joseph. And then please, you have 3 minutes.
The gender disparity in mobile phone ownership still persists. You'll find that there are more men who own mobile phones. And even where women do own mobile phones, usually their husbands do actually have control in terms of what they can actually be able to use those mobile phones for, especially when it comes to money. So that still is a challenge, and we've not yet figured out a way to crack that puzzle. But one of the ways that we are thinking about, one of the ways that have been tried up in other different markets, is to be able to have an arrangement with the financial institutions to for these clients to be able to purchase these gadgets on credit over a long period of time, considering the conditions. In that way, over a long period of time, maybe over 12 months or 24 months, the client is able to access this mobile phone through an asset financing product, a product asset financing product. In fact, one of the things that we are designing now is a group lending model, but focused on productive and non-productive assets. So something like that could still be able to help women access a mobile phone, because it's an asset, because then you can use it for many things beyond just voice. In terms of what were the phones mainly used for, the phones were actually mainly used for payments and for these groups being able to access their bank accounts as a group and as individual members within the group, and also being able to efficiently service their loans remotely. So instead of having to go to the bank and deposit, because you have to spend money to actually travel in terms of time, but also in terms of money. Now that in itself is a big barrier for rural women in terms of accessing finance. So if you can be able to reach them where they are, and they don't have to leave their farms, or they can easily be able to get in their group, and collectively they can be able to know what is on their accounts, the balance on their accounts, and they can still be able to service their loan in the comfort of their community without having to go to the city center where the bank is. That in itself increases tremendously the number of women, especially in rural areas, who can access this finance. So it was mainly for purposes of payments, accessing their bank accounts remotely, and also being able to service their loans remotely.
Thank you so much. Right on time. Right on time. This is much appreciated.
Sure.
And this is perfect because I know that there's been some interest. We have someone who raised a hand and then now has just lowered. So we appreciate that. We would like now, just in the interest of time, to take a moment to really thank the panelists of the first session. Thank you so much for your expertise. Thank you for your dedication, for the prep work that you did, for being willing to really provide detailed answers to the question raised by the audience. This is very much appreciated. The richness of this discussion is much appreciated by the participant. So thank you so much for that. And then what I would like to do now is to transition to the session number 2. And with this, we would continue what I like to position this as an interactive discussion. And then for this, I have the pleasure to welcome 4 panelists who will share the consideration about the experience as well as concrete examples to overcome the collateral barriers for rural women and the policy, legislative and regulatory requirements for doing so. They will also share experience related to some of the challenges, successes, and opportunities from their own countries. With that, I would like to invite Honorable Neema Lugangira, Member of the Parliament of Tanzania. Over to you. This one is a little bit different. So what I would do, I will ask you a question, and then if you can put that in the context of your country, so that would be very much appreciated. So now we have seen, you know, from the previous conversation that there are a number of ways where parliamentary can impact or can create an incentive environment to promote the financial inclusion. So what are the policy, legislative and regulatory reforms that have been introduced to foster an inclusive financial space for women in your country? Please, the floor is yours.
Hello, everybody. My name is Neema Lugangira. I'm a member of parliament from Tanzania. And I'm supposed to be talking about the types of policy, legislative and regulatory reforms that have been introduced in our country to foster inclusive finance space for women. And basically what I would like to give, I would like to just quickly give a bit of background on Tanzania. As other developing countries, about 60 to 70% of the population is involved in the agricultural sector. And out of that, about 80% of them are women, mostly rural women. And like other developing countries, a lot of these rural women are still economically not where they should be. But despite the fact that a majority of Tanzanians are involved in the agricultural sector, our agriculture contribution to our GDP stands at only 27%, which is greatly contributed by, we tend to believe, our productivity in terms of the yield. So over the last few years, the Tanzanian government has been working a lot towards ensuring that they improve the access to finance of smallholder farmers, and particularly women. And like in Uganda, in Tanzania, one of the most popular alternative approaches to collateral is the group lending, whereby women come together in groups. That is one. But also the Tanzanian government introduced loans with no interest, like a revolving fund, which is at council level, whereby all the councils in Tanzania are supposed to put aside 10% of their revenue made from within the council, not from the central government. Their own source revenue, they put aside 10%, and out of 10%, they make loans to these groups. So it's 4% goes to women, 4% goes to youth, and 2% goes to people with disability. And this was passed in parliament. So it's actually a legal requirement that each and every council from their own source. So if they make 1,000 shillings, they have to set aside 100 shillings. And out of that, it needs to be distributed 4% women, 4% youth groups, and 2% people with disability. And most of these groups, the money they tend to use is for agriculture related activities, either poultry or small animal keeping, agriculture, food processing, etc. So it has proven to be highly efficient as an alternative source for rural finance, because most of them cannot meet the normal collateral from the banks, etc. But it also has its own challenges in terms of making sure that the women groups, youth groups, and people with disability groups that get these loans actually have the financial skill set and ability to use those loans and pay back, because it's supposed to be revolving. So that's where one of the challenges is, and the government is working towards that. Another intervention that our government made is we have a number of economic empowerment funds. So there's several economic empowerment funds that are all focusing on women and youth, and mainly in the agricultural sector. And again, these are set up to support as an alternative source of finance to the women, especially in rural areas. And actually, I think just 2 weeks ago, I asked a question in Parliament to find out what number of women outside our business capital, Dar es Salaam, who have actually benefited from these economic empowerment funds. So and it was very pleasing to note that actually out of all the loans that have been given, over 60% were for women outside of Dar es Salaam, which is a very important thing for African countries to look at, because oftentimes those who are not close to where the head office of the particular economic fund is, they tend to not get access, because these economic empowerment funds don't have offices across the country. The other intervention that we have, I'm sure as most of you know, recently Tanzania, we lost our sitting president, passed away, may you so rest in peace. And we now have a new president. Her Excellency Samia Suluhu Hassan is our current president. And being that she's a female president, she has reaffirmed her commitment in terms of ensuring that there's an improved, financial access to women in the rural areas. And actually, in one of her recent meetings, she said that she's particularly keen on making sure that we achieve economic justice for women. So that was an interesting angle in terms of also trying to look at rural finance, not just as a finance, but also as a way to make sure that, when we want to reach gender equality, we have to make sure women are economically able. And most of these gender violences, gender inequalities, etc., boil down to sometimes women are not economically able. So they tend to stay in abusive relationships. They tend not to be able to take steps forward, etc., due to the financial capacity. And she recently set up a team of very, very able women leaders to try and look at this area of how can they create economic justice. And what she did in that team, she picked women executives from the financial sectors. So like the managing directors who are women in the financial sector, or their board members, to try and bring them on board and give them the task, how can Tanzania better frame its policies to make sure that, rural women benefits and are able to get the financial inclusion that is required. But the other,
Thank you so much, okay. Honorable. I mean, this
so that's
really
just in a nutshell. So
no,
that's where we are.
Passionate. We can see that you're extremely passionate, that you do speak from the heart. So we will have an opportunity with the Q&A session to actually address some of the questions that you actually alluded to. So thank you so much for that. And what I would like to do is to turn now to Honorable Fatoumata Njai, member of the National Assembly of the Gambia and country representative at the ECOWAS Parliament. And that will be for you, Honorable, the same question that I will briefly repeat. What are the policy, legislative, and regulatory reforms that have been introduced to foster an inclusive financial space for women in your country, in the Gambia? Over to you, Honorable.
Thank you very much, Naya. My name is Honorable Fatoumata Njai. I'm a member of Parliament at the Gambia Parliament, and by that part, you also represent the Gambia at the ECOWAS Parliament. And I'm very pleased to contribute, albeit short notice, because the issue at hand is very important, to explain the type of policy and legislative regulations, regulatory reforms that have been introduced to foster inclusive financial space for women in the Gambia. Gambia, we all know, is one of the smallest countries. It's one of the smallest countries in mainland Africa, with a population of only about 2 million people and a GDP of 1.6 billion, and a GDP per capita of less than $700. So with services providing the greatest chunk of the economy, contributing to about 57%, the second being agriculture. And according to GBOS 2017 report, the population of 1.9% comprised of about 53% female, the majority of whom lived below the poverty line and depended solely on farming, not only for subsistence, but also to educate their children. It is thus of great importance to ensure success in their agricultural practices. In 2020, the government, realizing the importance and the need of access to finance, it introduced the Women Enterprise Fund at the National Assembly. The Women Enterprise Fund, recognized the lack of access for finance for women, and as a result was seen as an alternative to collateral, because women could be given loan without having to provide any security. All they needed was to come as a group, and the loan would be given to the group of women through their account, and they would be paying directly through the same account. So in a way, the account and the formation of the group was sort of like the collateral, which was good, because in the Gambia, women hardly own property. Even if they own the property, most of them, they would need the consent of the head of the family, which is most of the time the husband, to use the property as a collateral. So it was next to impossible for them to use it. Moreover, the banks are also very expensive when it comes to financial lending, because at one point, the interest rate went up to 31%, but after 2016, after this new administration came about, they reduced the interest up to 21. At one point, it went down to 18. So in effect, if women would use those loans for agricultural purposes, considering the risk of agriculture and sometimes the low turnout of harvest, they might not be able to repay those loans. So in effect, we applauded the Women Enterprise Fund by the government. But that wasn't a new phenomenon, though this was directly by the government. But there was
you have
also—
about 2 minutes, please. You have about 2 minutes.
We also had the Social Development Fund as early as the 80s, where women were trained and given low-cost finance also. And that at one point, some time ago, in about 2017, they tried to turn that into a fiduciary financial service. That they did in collaboration with Central Bank, and they are going to turn that Social Development Fund into a finance bank to mainly finance rural farming, which is in the process. They've submitted the proposal for consultants and studies into that. Probably next time when I have more time, or I can send the report so that you can publish it in your website, because obviously I don't have time to do all the presentation. But also Gambia being a member of the ECOWAS, and also me being an ECOWAS parliamentarian, in 2018, we also joined with IISD and Oxfam to support women. Unfortunately, we've not had any projects yet, and it's been 2 years. So hopefully we will follow up on that and try to support women, because they need, most of the time, they need seeds, they need fertilizers, and also they need some sort of help in irrigation. There are some parts in Gambia where the river is part salty and part fresh river water, depending on the time of the year. 3 months is salty and 3 months is fresh. So they need some support, not only in finance, but also support to make sure that they retain the fresh water to be able to use it in farming before it turns into salty water. But like I said, since the time is short, I will send this report via email so that they can publish it for people to know exactly what we are doing. But the government is trying to be more inclusive by opening the access for finances to women, especially the rural women. So far, they've disbursed about $11 million to the women. Thank you.
Thank you so much, Honorable Jai. Thank you very much. And that was right on time. Much appreciated. Thank you. So those insights from the Gambia are extremely interesting, actually, particularly that they are very much adapted to the local context. I was particularly interested in the last one, right, where you recognize that salty water is a big challenge for agriculture, but then there is a way to actually make sure that women have an increased access of fresh water to conduct their business in agriculture. Thank you so much, Honorable. So with this, I will now give the floor to Bernard Chitunga, a senior officer at AFAWA, the Affirmative Finance for Women in Africa, an African Development Bank-led initiative. So the question that I have for you, Bernard, is the following. I would like you to elaborate on how the African Development Bank is supporting financial inclusion on women's entrepreneurship through AFAWA. Over to you.
Thank you, Ndaya, and thank you, FAO and WISD. The conversation that we have had from the time this webinar began pretty informs us why it is important to invest in women entrepreneurs. And you can see the passion and what has been put forth, because when women win, the globe wins. So when women entrepreneurs win, and the globe becomes a better place. And in fact, for us working in Africa, Africa moves to the next level. And so the African Development Bank back in 2016 did a study and laid its finger that the gap between men and women entrepreneurs on the continent is approximately $42 billion. And out of this $42 billion, 15.6 billion was specifically in the agriculture sector. That is when the bank decided to establish the Affirmative Finance Action for Women in Africa, which is a Pan-African program aimed at denting the 42 billion gap by 5 billion in the next 5 years. And when we say in the next 5 years, year zero is 2021. And so the how is we have an innovative guarantee scheme that we are together working with Africa Guarantee Fund. We know that Africa Guarantee Fund is a DFI that is that always guarantees financial institutions to on lend to SMEs in particular. But the Africa Development Bank, through their AFAWA program, which is financed by the G7, and it's financed by the Netherlands and Sweden, and Rwanda is the only African country that has invested in that. We are backstopping Africa Guarantee Fund. What that means is that we have created, quote unquote, an AFAWA window at Africa Guarantee Fund, and then financial institutions in the continent go and sign up on that AFAWA window at the Africa Guarantee Fund, and they are able to on-lend to women SMEs covered through this innovative risk share mechanism. And we do not stop there, because our study, of course, again, put our finger on the deep systemic imperatives that make financial institutions not to lend to women. So we accompany this because AFAWA is a multidimensional approach flagship at the bank. We accompany this when a financial institution signs up on the guarantee at the Africa Guarantee Fund. We accompany that with technical assistance. We do a diagnostic at the financial institution level so that they can be able to understand themselves what makes them not to own lend to women entrepreneurs. And so we extend a small grant to do that. And again, we do not stop there. Their portfolio, their women entrepreneurs, either already in their portfolio or envisaged, we extend a grant for capacity building, a technical assistance grant, so that if we have a portfolio of women who needs to be brought in, they can be upscaled to that level. And also there is guarantee, there is this technical assistance that goes along with that. But also we know the importance of the enabling environment, and therefore, as the bank, we are working with Alliance for Financial Inclusion, we are working with the region economic blocks, but using the bank's convening power also, working with the central bank governors. In fact, we're going to have a round table with the central bank governors so that we can sort of discuss increase in accountability in terms of the banks reporting on the amounts they lend to the women entrepreneurs. So that is our first channel, which is the FAWA guarantee for growth. And then the second one is we leverage the instruments we have, lines of credit. We put money to EcoBank, to Equity Bank, to Atijiri Wafa, to ABSA, or whichever bank in the 54 Africa countries. And once we do that, we also sort of earmark a percentage specifically for women SMEs, and we accompany that with a technical assistance facility to support the capacity of that financial institution and also the capacity of the women in their portfolio. And so for us as a bank, when we look at the numbers that are out there, we are looking at, yes, supporting the women SMEs, but also catalyzing the private sector to partner with the public sector so that the whole Africa financial ecosystem can be incentivized to lend to the women SMEs. And of course, people ask, who is a women SME as a bank? We use the 2X challenge criteria to define a women SME, which is a criteria developed by, the DFIs around the G7, because we are resourced by the G7. And we can only look forward to partnering with as many stakeholders so that to us by the year 2025, 2026, we will have unlocked $5 billion to women SMEs on the continent. Thank you.
Thank you so much. I like the sound of that, $5 billion to be unlocked and then geared to women-led SMEs. It sounds like a daunting endeavor, but I think if we can achieve that in 5 years' time, that is in 2026, we'll be ever closer to achieve the SDGs. So, we wish you well with that endeavor. So now I would like to finally donner la parole à Madame Kadi Faltal.
I'd like to give the floor to Madame Kadi Kalfa, chairperson of the West African Women's Association. I'd like to conclude this. I'll speak French so that we have a balance. Madame Ta, what is the experience of rural women and the organization with regards to their access to financial services, and how do they overcome the lack of guarantees? You have the floor, Madam Tan. Thank you, Madam Chair, and thank you for inviting me. I would just like to say that just as African countries that you are familiar with, Senegal is not an exception when it comes to difficulties for women to access funding, namely, especially at the level of commercial banks. And for this reason, there's a statement earlier on. I want to support that parliamentarians should take this issue on board instead of leaving the women at the mercy of the banks, because the rates are increasing and women don't have access. the documents they use to have these loans are problematic for these women. They're too complicated. There are funds in March. Oh, the line is it's difficult. I am one of those who are mediating this process. How come so much money was infused in this funding of youth and women, and the crisis has occurred and these people are suffering? So we need to look at the quality of the funding and financing that is available. We assess the financing that is announced and for which we know from our experience from the ground, women are still not having proper access to this funding. Meeting has not come up with a type of women that should be supported. And if women farmers or women producers, because agriculture is first, in what area can we certify our target, our funding? And you will know that we're more concerned by processing that is secondary work in terms of agriculture. Those who are doing the production is those who are selling the harvest, but we are involved in processing, and it has become an alternative that needs to be supported financially to reduce importation of food, because we are now analyzing food systems, and we do understand that food dependency is still a reality. So when we talk about funding, we would have liked funding and financing focuses on consumption of products. It is an indigenous approach to development, and I'm sure that FAO that I've worked with for a long time supports the communities, especially the vulnerable, in our mix. I would not want to go beyond 5 minutes allocated to me, but I like to underscore the problems that are peculiar to women, and that is contained in the document. I said they have problems for access to land, and there is a directive or that ECOWAS is preparing and is being finalized about agriculture.
Avec les actions de FAO.
And this is linked with FAO activities that are important, and they are focusing on financing. And this is Square Plus 10 that we're talking about. And that, oh, the line is very bad. Less for women, that they are penalized when it comes to working in the area of food transformation, agricultural funding. But yes, but in what area are women the most vulnerable, and where do they need the intervention of development partners so that they are left in the lurch? Because they open these financial decentralized institutions. We are not there. They're not there to develop women. If we understand that dynamics, we can but commend you that you have invited the parliamentarians. They can legislate, pass laws, as they've done in some countries I know about, to ensure that the percentage does not go beyond a certain level. Some up to some of the interest rates in some countries 20%, and the payment period sometimes is very short. So that jeopardizes this access to financing. We are happy that parliamentarians have been invited by FAO to discuss these matters, burning issues, Madam Chair. It was, this idea of cooperatives is a good one, because there are no short-term loans. And these are the tools that we should focus on. But over and above all this, there must be a specific dedicated fund for development of women farmers, and then we rank them to know where women are and which women need funding. Include fisheries, agro-pastoral activities, and a whole host of areas where women require assistance. I hope I didn't go beyond the time allocated to me. Thank you, Madam Fall, for your presentation that dovetails with the other presentations, because you have said that we need specific tools to support women's activities, and we heard from different panelists that is what they're proposing. We've seen different examples, different countries, including the example of West African African Development Bank. Thank you, Madam Fall, for your excellent and timely proposal.
I would like to invite Francesca Nugnes to do a quick presentation. I believe that she has some experience that she would like to share. So Francesca, the floor is yours.
Thank you very much. Can you hear me? Yes. Thank you very much.
Yes, go ahead.
I'm glad to share with you what we call the best practices for women access to agricultural finance. These practices have been developed after a deep study with 8 impact investors. And the aim is to mitigate the risk of an investment. So they could be considered as an alternative indeed to collaterals. The first point we highlight is the importance of organizing the women entrepreneur, the farmers, for several reasons. First of all, to increase their negotiating power versus the buyers, and also a way for the investors to mitigate their transaction cost and monitoring cost. And this can, of course, encourage the investor to invest in women entrepreneurs. Then there is the role of technical assistance, especially in the agriculture sector. Of course, we know the importance of these practices. And of course, also the possibility of improving the digital skills of women, which is essential. A third point we propose is to increase the chance for partnerships between private and public actors to, again, support women entrepreneurs and possibly facilitate their access to finance. For instance, it's important to obtain possibly a buyer contract, a sale contract that the investor can use to mitigate the risk of an investment and use it as a potential guarantee, an alternative to collaterals indeed. What is very important, and it has been highlighted by all the presentations, very useful, that have been done during this webinar, it's the importance of knowing the needs of the women entrepreneur, not their needs, especially in the agricultural sector, to prepare and propose services that are more adapted to their needs. And also, for instance, this could, through digital tools, investors could learn more about the habits of the women entrepreneurs and possibly increase trust on women entrepreneurs and facilitate their access to finance. One last point we would like to propose is to develop and design financial products that, again, better answer the needs of the women entrepreneurs, for instance, through flexible financial products, long-term advance payments, and of course, the digital delivery of financial products. As we know, it's hard to reach out to women, so through digital instrument, it could be easier and also less costly for investors. one last point that maybe I would like to address. I've been mentioning a couple of times the importance of technology and digital access. And this could be an encouragement maybe for governments to further improve access to infrastructures, to access internet, possibly at an affordable cost. Thank you very much. I'm willing to provide more details about these studies if anybody's interested. Thank you very much, Nadia.
Thank you, Francesca. I'm sure that participants will be interested to receive the presentations or any other information available. I saw that in the chat, they've been asking for documents, PowerPoint presentation and the like. So I'm sure they will be interested. With this, I would like to open the floor for questions. We have about 15 minutes. So we've been managing time successfully. Thanks to all of you. So thank you very much for that. That gives us time to actually engage. I see that one hand is raised, and I would like to invite Lorraine Kiswanda. I hope I'm pronouncing your name correctly. Please, you can come on and ask your question. Over to you, Lorraine. Okay, so let's move to, I do have a couple of questions. Let me see, and I have so many different ways to receive the questions. So let's say that the first one that I have, it's for Honorable Nema, and actually the question is related to the revolving fund. Let me see, and I'm going to read the question as I have it, so then it's, we save time. So has the revolving fund that is generated at the level of the councils reduced gaps in access to capital for rural versus urban, poor areas, and so poor councils, I imagine, and rich councils? So in other words, really understand to what extent the profit that the council have to reinvest has closed any gap, if any. And then the second question, still to Honorable Nema, how is the Economic Empowerment Fund linked to increase credit access to women in Tanzania? So two questions for you, Honorable Nema. Over to you, and I would like to give you about 3 minutes, if I may, so then we have time for other participants as well. Over to you, Honorable.
Thank you very much. Basically, I was saying that we have about 17 or so economic empowerment funds, and each focus on different elements. And basically, these were started to provide alternative access to finance to women and youth groups. And the way in which it works, it's one, they provide loans, which of course is of no interest, and second, they provide bank guarantees. So they use in twofolds. And regarding the revolving fund at council level, recently they did an analysis and found that there are councils which are obviously richer than others due to their own sources. So what the government has been trying to do is to pump in money from the central government to bridge the gap of those councils with lower own sources. And in general, these two options have greatly contributed towards bridging the gap of access to finance, but it is not enough, because Tanzania is a huge country, and most of our region, especially rural regions, you have got a good number of people. For example, just from the region that I come from, Kagera, there's 4 million plus people. So you can imagine in the entire country, 60 million. So it's not enough. And the greatest challenge, which currently the government is trying to find interventions, is the fact that sometimes the groups, the community groups, they take the loans, but they don't have the financial literacy to use effectively the money that they get. So they don't return the money timely, so that it doesn't, so then it affects the revolving fund. You find that every year the councils are budgeting new funds instead of having others who have returned the money to make the fund larger. So that's the challenge that has been identified and the government is currently working on. But I've learned a lot from other panelists and the different questions and answers in terms of the role that members of parliament can play towards having the correct regulatory framework for these community-led and micro financial institutions. Thank you.
But if I may, Honorable Nema, you did mention that one of the challenges of this council, those funds generated with the profit of the council, has been the use and the payback. We have seen, or at least we have heard from the example of AFAWA, that they do provide a lot of technical assistance. You know, first there is a diagnostic, and then with diagnostic comes a support or a package to strengthen, you know, the need or to address the challenges of the gap that has been identified. Is there something like that that has been envisaged by the council in Tanzania? And if so, how is that work? And if not, what are the challenges there? Over to you.
Thank you. Basically, those things have been identified, and the government through the President's Office, regional administrations and local government are looking into ways of bridging that gap. But of course, with one of the things that attracted me to even participate in this meeting is to see even how can we bring together, you know, stakeholders in the agricultural space and rural financing to see if they can be support extended to our local governments, and even have a pilot of a certain, you know, council which was perhaps performing poorly, and through this capacity building and you know, innovative intervention, there's been some positive progress such that we can then, you know, try and advocate for the government to take that on board and scale it up to all the other councils. So I think that's something that I would be very much interested in to see how we can take forward from this meeting.
Thank you so much, Honorable Nema. I see that Frederick Mungisha has a hand raised. Please come on with your question. Over to you, Frederick.
My network is very, very poor.
Okay.
I've been off for some minutes, then I come back, so I'm sorry. But now,
that's quite all right. Please, over to you. Over to you.
Yes. It's not a question, it's a compliment. I would like to thank all of you who have participated. And my name is Frederick Mugisha. I represent Microfinance Support Center in Uganda. I've been hearing some of the presentations, especially from my colleague this Mr. Wama from Uganda. Microfinance Support Center, we have erased some of these challenges I've had you people talk about. For instance, the challenge of how to train women at the group level, the grassroots. We have created a system where we train a few young women who have attained a certain education, who have not gone very far to the university, and we equip them with some skills of financial skills, such that we each 5 groups, we give them 2 parishes. 2 parishes would compose about 10 to 15 groups, and give them targets if on a commission. If they give us, for instance, these women collect money from various activities. These are economic activities, agriculture, shops. Some of them sell fish. Some of them do other economic activities. So when they come and collect money, at the sharing part, that's where problem come. They share money, and the group dies there and then. But our people that we train reach to the sharing part, and they show them how they could share their money, and they leave some other portion to come as a brought forward for another session. And at the parish level, we create circles, and those circles, the other groups that we train at the grassroots, they concur with our circles at the sub-county level, such that they take the financial capabilities to the people in the village. So we have gone all over the country. We have branches, and we are ironing out, because we are a government oriented. We are not looking for profits or interests. That's what the arm of the government, looking for the economically active poor. The poor people who are economically active, some of them, they don't have collateral. And for us, we would want to look for that one, who are feared by the financial institutions, who have shares, who want money. Now, that person who cannot reach to the financial institution can reach to us. We give them money and equip them with the financial literacy, such that he knows. Okay, the ladies, especially the women, and we are very much.
Thank you so much, Frederick. Thank you, Frederick. Thank you very much. I think your intervention is extremely useful and important because you are relating some examples from Uganda, in particular, how you are reaching out to those that are totally disenfranchised. So this is very useful. In the interest of time, I would like to give the floor to another colleague or another participant who also has their hand raised, so we have time to also bring in the other participant and panelists. So forgive me, I will now pass the floor to the next person who has the hand raised. It's Amadou Nikiema. Amadou Nikiema, you have the floor.
Thank you very much. Merci beaucoup. J'espère que vous m'entendez parce que je vous appelle.
I'm calling from my car. No, we cannot hear you. Kindly be brief. It's difficult to hear you. It concerns AFAWA with regards to the criteria for recruiting people for them to have access to loans, so that women can have access to this funding. What are the criteria that you use? Bernard? Thank you, sir.
Thank you, Nde. I'll be brief. So the role of the bank and the role of AFAWA is to incentivize the financial institution. First, the financial institution has many reasons themselves on why they do not lend to women. And so as the bank, as AFAWA, we're telling them, we are going to cover you up to 75% if the women SME doesn't repay. And then the financial institution is saying, of course, I don't have a unit or I don't have policies in place. Then we support them to have the policy to lend that. And we support them if they have this group of women, they are saying we support them to train and to capacity them. And so the bank purpose is not to crowd out and to dictate how the financial institutions should lend, but just to incentivize. So the criteria pretty remains with the financial institution, but as a bank, our responsibility is to incentivize them enough so that they lack reasons why they shouldn't.
Thank you, Bernard. But then in terms of the criteria for selecting those institutions to participate in the program, any information on that? Over.
Yes, so the thing is, all financial institutions on the continent qualify, provided they have a conversation with the Africa Guarantee Fund, because the program is, all financial institutions across the tiers and discussing with the Africa Guarantee Fund so that they sign up to the AFAWA guarantee at the Africa Guarantee Fund. And since we launched the risk share in February, already 6 financial institutions across 12 countries have already signed up on the guarantee.
Thank you so much. Thank you so much. Honorable Njai, if I may, I would like to ask you one question. You did talk about 2 particular funds in the context of the Gambia. You talk about the Women's Enterprise Funds and the Social Development Fund. So we've heard the experience of the other countries as well. So now, how do you think that the conversation that we've had today, what is it that you're taking away from today's conversation to strengthen either the 2 funds that you shared with us, or perhaps to do something different in the context of the Gambia? Over to you, Honorable Jai.
Hello, Ndaya. I think I must have missed it. I must have missed the question. I only heard the first part where you mentioned the revolving women enterprise fund, but I think I must have missed the
Let me repeat. Yes, let me repeat. I'm saying that you did share experience from the Gambia based on the conversations that we've had today. What are some of the takeaways that you may want to use for those two instruments that you mentioned, or some of the things that you may want to create in the context of the Gambia? Over to you.
Yeah, thank you very much. I think what I've learned a lot from the conversation today, and from what I would want to implement in the Gambia, because this revolving fund, it's not specific for agriculture, and that is the main reason that we are here today. So what I would recommend is to have the government to have specific reserves purposely for agriculture, because like I said, if 23% of our GDP is from agriculture, so it might double if more is invested in. And we know that the majority of the farmers are rural women, and they depend solely on the little that they have. So rather than focus mainly on the Women Enterprise Fund, we can also have like an agricultural development fund where we can also tap for resources from other areas. So that is the takeaway for me today.
Thank you so much. Thank you so much. And I think we also, what I also heard was the need to actually realize that Africa is a big continent, and then each of the countries are also very different. But within each country, we have different needs and different priorities. So it's extremely important from all of us, to recognize the need to do proper assessment, proper scoping, to really understand what needs to be provided on the ground. So for me, that's really one of the big takeaways that I'm taking from this. Madame Fall, je voudrais aussi vous inviter à...
I would like to invite you to share with us, taking into account the conversations and the information shared this afternoon, to your mind, what would be the role of that the parliamentarians can play, especially to support the people that you represent? Madam Fall, you have the floor.
Merci beaucoup, Madame la Présidente.
Thank you, Madam Chair. I understand your question very well. Very often, parliamentarians are not very conscious of the issues of the people. Parliamentarians seem to be unaware of the realities the grassroots are grappling with. And sometimes, as we speak, they are not results oriented in their approach to agriculture. And we believe that parliamentarians, they carry out assessments, they carry out missions, but often parliamentarians are more engaged in politics, and that is a minor problem when it comes to the reliability. But with regards to the rationality of their approach, vis-a-vis the equidistance that we went between the tools and the users of these tools, and that is a problem area. Distribution is not equitable. Some actions are not shared equitably. The interest of FAO and our partners in this exercise is to have allies, because as we know, in terms of management and negotiations, we need always to have allies, people to support us, to have a platform to transform this meeting into a brainstorming forum. And that would be very useful, because for me or somebody else, if we're taking from our natural environment to even have do better, we definitely need such a framework where we have different stakeholders, parliamentarians, women, their representatives, in order to be able to grapple with these matters in a holistic manner so that everybody can play their role, and so that financial institutions at the grassroots level can establish collaboration, forge collaboration with women's groups for their revolving loans, because this is a very old approach, but we've not found a better method to combat and to do away with the high interest rates. That's an observation I wanted to make. Thank you. Factors of production. Vis-a-vis women, all women in agriculture do not have the same needs. Those who are in the processing area need equipment, they need packaging, they need marketing tools, and they need access to financial markets of the state or markets to have access. But this is an issue, and they need support to compete at different levels. Financing depends to a large extent to the level at which one is and the nature of the agricultural sector one is involved in, and everybody needs the support of FAO. I would like to commend FAO for everything it has done in my country during the COVID crisis to support over 2,000, almost 3,000 households times 2 in August. And this goes to prove that FAO is really interested in the population. Thank you, Mrs. Fall.
With this, dear participants, we are coming to the end of this really enlightening conversation. For my part, I learned a lot. I hope that it is the same for you. For me, it's been intense and very inspiring. We hope that this has enriched your knowledge on how to foster financial inclusion, particularly in the context of rural and agricultural sector, with the inclusion of women. We have looked at, or we've heard about some alternative mechanism, different approaches, as well as new instruments or old instruments that have been adapted to new context. So this has been extremely useful. And I think we have also seen the potential of those instruments in order to first, not only achieve food security, but also to improve the rural livelihoods. There is also a call for the parliamentarians, so they have a role to play in looking at the legal and regulatory environment. So it is an enabling environment to support innovations, to continue to protect the data that is being collected, and then to incentivize really financial institutions to go and provide the services to rural women in particular. So before closing the session, I would like to thank you all for this rich and constructive exchange. I would also like to thank our speakers for all of your insights. I also thanking all of the organizers for making this important exchange possible. And we very much look forward to your participation in the near future. Then I ask for you to stay tuned. And with this, I would like to thank you very much and then to call this session to a close. Thank you very much.